All right, I am back for one more carrier update with Sultan of Sonar. Zach.
Let's do it. So the 3 rejection rates for each mode. Reefer rejection still traveling much higher than the other 2 modes, up here around 38%, inching a little bit higher today. Flatbed tender rejection rates also inching slightly higher, 24.2%, but down week over week. Van rejection rates still edging slightly lower than they did to start the month. Not really a lot of big changes there. As capacity is, I don't want to call it stable, but it's not changing dramatically right now.
Yep.
And a lot of that has to do with the seasonal patterns that we're seeing. If we look at the Outbound Tender Volume Index real quick here, demand starting to ease a little bit throughout the United States, a little bit as we would expect this time of year. If you look at last year, even amidst all this volatility in the market, volumes had just hit their peak level around Labor Day, and then they decided to hold right along this line right here, right around where we are almost today, 15.3K on the Outbound Tender Volume Index. But you see this little dip to start the month of October in both years, and they almost just perfect match.
Yeah, it's eerily, it's just crazy how they are following almost exactly the same pattern. So if they should, we should expect to see volumes rise over the next couple of weeks.
And that's exactly the point, is that yes, if that's true, then this is probably a safe assumption to see, although do not expect some sort of dramatic increase in demand overall. Like, capacity has not increased significantly through any mode. Obviously, there's a lot of congestion in all points of the supply chain. So this is a pretty safe assumption to say that this was probably going to happen, a 1 to 2% increase here over the next week or so, and then kind of this subsequent, like right around the holiday increase. The big takeaway though, looking back at Labor Day, shippers are a little bit more savvy than they were this time last year. You may see this move forward a little bit. Time will tell on that one. Let's go ahead and check out the contract rates, see what it's going to cost them. So contract rates took their biggest jump in September that they've taken. We had a little bit of a horizontal trend line throughout the summer, but we saw this big striation of increases coming online right around Labor Day. And this is, mini bids, things, they're renegotiating on a much quicker cycle than they have been in the past. Trying to get some of those route guides locked up a little bit stronger throughout the, the holiday season here. But like we've seen, tender rejection rates haven't really come down significantly in response to these rate increases. So one of the biggest factors of of the tender rejection decline has been the growth of short haul freight in relation to long haul freight. So these rate increases not as effective as they have been in the past.
I think it's going to be really fun to watch the Q1 rebid season, whether these shippers and carriers that have been kind of pushing for shorter contracts to give themselves flexibility, if they see maybe there's a little bit of a slowdown coming, maybe we should try to get a longer contract now. It's going to be fun to watch whether they revert back to longer term contracts or not early next year.
Well, prices are negotiated off the previous year's activity. So I think it's pretty safe to say that anybody that's operating on annual bid needs to expect a rate increase in January, February, March.
Right.
This pattern is going to persist. So this is the market. This is where the market is going to pay right now. And that if you haven't renegotiated since March, you need to go ahead and expect a pretty decent little rate increase to make up for it starting in next year. Let's look at the map of the United States to see if there's any markets worth talking about. I got Memphis right here showing the biggest tightening signals on the weighted rejection index, combining market share value and weekly change in tender rejection rate. So if you're headed there, look for a little bit of tightening going on. Ontario's still showing up in the light blue. Not a significant change there, however. Dallas, the big loosening market. Now, if we look at our next chart here, looking at both these markets, Memphis right here in the green, showing the big jump, 31% tender rejection rate, as high as it's been since the middle of August. Big takeaway there. Dallas, 18.9%, the lowest it's been since before time was created on this chart. So since at least the spring, rejection rates down lower. Carriers know they got to get into Dallas like they got to get into LA. So some easing going on here. So big takeaways. Memphis, a little bit more spot activity. Dallas, not so much as they had last week.
Yeah, a lot of warehouse area there in Memphis coming off the rails. A lot of congestion trying to probably get some of that retail freight moved into stores and warehouses before the end of the year. All right, Zach, thanks so much for your time and effort today.